welcome to a new ATFX video. My name is Gonzalo Canete, and in this occasion I'm here just to share with you a quick review on the UK economy, especially because UK is about to present the new macroeconomic data related with the GDP, and because of that we want to review the pound and the equity market in UK. We also going to review the pound related with the euro and with the dollar to see mainly the difference. But before I go into details, please remember, click on the subscription button, give me a thumb up by the end of the video if you like the content, and also click on the bell if you want to receive notifications anytime we update new data related with financial markets. And here we go again. I made, as usual, a presentation just to follow up the points I want to share with you. And at the end of the report, you will see the charts with the most important levels to follow up. I want to give you a general view, especially because it's getting a very interesting moment, especially for the pound. And the UK equity market also is in a very interesting point. Let's go step by step. I think one of the things we need to review is the interest rates and the inflation rates, because that's what it's all about. Central banks are basically the ones who are dictating the course of the market, the trend of the market. And that's why we need to review the situation with the interest rates, the situation with inflation, because it's the main keys to determine what is going to be the monetary policies by the Bank of England, and therefore understand or see in advance what could be the cycle of the market for the equity market and also for the pound. If you take a look here, what we can see is the differential between the interest rates and the inflation. And so far it's good because interest rates is still above the inflation by 4.75. We discount that maybe it's around 75 basic points discounted this year, or cut on interest rate this year. And still the inflation has been rising since September, because it was 1.7 in September. And since then, even November was a little bit higher than December, it still is in 2.5, 2.6%, as I mentioned on the bottom of the line, from 1.7 in September. At the end of the day, the last readings we received in January, it was the ones from December. It was 2.5% inflation rate, but it's still lower than interest rates, something that Euro cannot say. And this is the main difference. You got in the screen right now. Let me share the whole screen. You got in the screen right now. On the left side, the UK inflation rate against the interest rates, 4.75 interest rates against 2.5% inflation, common inflation, CPA. If you take a look at the same chart on the US economy, you can see that it's very similar to the chart of the UK economy. But if you go and take a look on the right hand, Eurozone inflation, you will see that the interest rate is almost on the inflation rate, and therefore it means there is no room to keep cutting the interest rate in Europe, and therefore Europe is in trouble. So again, there is a stimulus, margin for stimulus in UK economy, similar to US economy, but not for European economy, and therefore that's why we can remain positive on the equity market in UK, because still Bank of England could give certain stimulus to the economy. Economic growth and fiscal policies. In 2024, the final growth of the economy was 0.85%, which is a pity because the initial estimation was 1.1% growth rate, even above the expectations. But by the half of the year, entry in July 2024, the new government came, and with the new policies, increasing the expenditure, and also announced new taxes, and therefore I believe the new taxes is the ones that could depress the economy. Bank of England concerns is potential increase in public debt and slower economic growth caused by the increase on the taxes by the UK economy, by the new government of UK. Now, the last positive thing from a fundamental perspective, Donald Trump trade war could be make an exception in the case of UK, since Brexit take place in 2016 and it was effective by 2020. Therefore, UK economy is detached from the European economy, and maybe Donald Trump is gonna keep UK out of the economical sanctions or trade war against Europe. Now, going to the chart, which is the important point and what everyone is waiting for. You got in the screen a clear downtrend, and it's represented by cable GBP against USD. So we can see on the chart that the pound is getting weaker and weaker and weaker against the dollar since 2008. And therefore, that's why I believe in long term, dollar is going to be super strong currency still, especially with these new policies from Donald Trump. It's incredible, but the charts seems to discount absolutely everything, the future on this chart. If the trend continue, what we can expect is a decrease on the price or decrease on the exchange rate of the cable, and a still drop to 1.10, even to 1 parity on cable, even below that parity if the projection keep moving down the pair. And if you take a look on euro dollar and GBP USD, so the pound against the dollar, the euro against the dollar, it's almost the same chart. You can see that it's almost the same chart. So therefore, we can believe, based on these two charts, that obviously dollar is going to get stronger against these main currencies, the euro and the pound. And that's why I believe, if you take a look closer, you will see that actually the pound is resisting better than the euro. Euro is below those levels, but still pound is resisting and floating about 1.24. But in my eyes, I believe the pattern is so clear for two biggest currencies against the dollar, and therefore it means most likely we're going to see a super strong dollar in the coming months, and therefore we could see these pairs, both of them, falling. In terms of equity market, has been amazing. The interest rate cuts by the Bank of England last week has been a good stimulus for the equity market. You can see that the FTSE has been rising since that interest rate cut. We can see a kind of boost, breaking up new maximums, new top records, around 8,775 points. But still, you can see also that the uptrend is getting weaker, because you can see that every single top is smaller than the previous one, and therefore it means that there is certain weakness on the uptrend, and therefore we could believe that this 8,775 points could be a kind of equatorial point or a pivot point or break point where the market could turn and may initiate a correction to the 7,100 points on FTSE 100. I base this projection basically on the symmetry between the previous runs since the 1998. It's a massive runs, goes from 3,500 almost to those 6,800. So therefore, we got like 3,000 points of runs, and that 3,000 points of runs is giving us that in best scenario, we could see the FTSE 100 going to 10,375 points, which is the top of that runs, completing the symmetry with the previous more than 20 years runs, and therefore that's why we believe that in that case that will be the next target. But still, this 50% of the movement is giving us a strong resistance. Also, the downturn on the upper line is showing us that certain weakness on the buyers, and therefore we could expect a correction or downtrend on FTSE 100 in the coming days or coming weeks. So be cautious, be cautious about the next movements. And that's all. Remember, if you like this content, give me a thumb up and subscribe to our channel. Leave your comments if you want to add something else. Okay, take care. Bye bye.